Okay, the ETF report, Tuesdays and Thursdays. One phenomenon we're seeing is pretty big inflows into these so-called Spot XRP ETFs. We're joined now by Mike Philbrick, a keen observer of the ETF market. Mike is CEO of Resolve Asset Management. Mike, thanks very much indeed for joining us. So apparently these XRP ETFs are different from other crypto funds. XRP itself is the native token of the XRP ledger, and it's a blockchain designed to make global payments faster. So this is not so much a cryptocurrency as a method of smoothing payments.
Well, yes, I think it is similar into some degree to the Ethereum and Solana blockchains. It is that layer that provides some opportunity for those cross-border transactions, which are a bit challenging. You can imagine you're trying to do some cross-border transaction, whether you're paying a service provider or paying for some resources, and you're dealing with different time zones, different opening hours for banks and things like that. So the idea that you could simply execute that at any time 24/7 and do that at a relatively low cost is very appealing and does increase the velocity of money. So whilst the coin is a bit unique, it is not that unique. And I think these ETFs came on the heels of the resolution of the SEC lawsuit against XRP and Ripple. And so what we've seen is a bit of a later stage ETF launch. And then what we're seeing is a preference for investors to actually own these digital assets in traditional rails rather than having to worry about keys and sort of non-traditional custodial challenges.
Purpose Investments among the players that have one of these XRP spot ETFs out, and they say this digital asset, this blockchain technology, this solution is being used by financial institutions around the world already to help cross-border transfers of money.
Correct. And that's happening broadly and widely, too. It's not just XRP and Ripple. Ethereum has been, I think JP Morgan yesterday said they're launching a money market fund. You have the BUDL institutional money market fund where BlackRock manages that. And that's an institutional settlement layer for money market transactions for institutions that's been working for over a year. And that's built on Ethereum. So what we are seeing is the actual use cases come to fruition. We're also hearing about that. I think one of the other news items was the NASDAQ talking about trading for 23 hours a day. And that's in preparation for and in competition with crypto markets that are already trading 24 hours a day. And, again, Paul Atkins said that basically all the stocks, bonds, and money market instruments will be tokenized. That's right from the SEC chair.
Mike, what trends are you looking out for in ETFs broadly for 2026?
Well, I think, what's really interesting right now is the market looks like kind of there's nothing going on as it hovers near highs. But don't be fooled. Underneath the surface, cash is rotating quite aggressively, and it's rotating out of those AI darlings, as we've talked about previously, and into the companies that actually either build the infrastructure required for that AI fulfillment or are deploying AI and automation real time to leverage those use cases. So we're really seeing the S-curve of tech adoption slamming into the J-curve of real world build out. And so that data centers need power, you need power needs and engineers, factories need more shifts, markets need to be prepared for longer hours. And so, this WSP news we saw, that's really, the power grid muscle. This is power engineering infrastructure at play that needs to be built at scale. And so I think that rotation is real. And you got to think about looking at your portfolio today. Do you have too much exposure to that sort of Mag 10, if you will? And look, even in Canada, look at the XCS, the TSX small caps, or the XMD, the TSX completion index. These indexes are heavily weighted to those financials, industrials, materials, those companies that are going to benefit mightily from the actual rollout that's going on. You can also look at healthcare and biotech, because these are going to be things that take advantage of AI, deploy it, and actually build more earnings out of it. And I think that's the real use case going into 2026. You want to see those use cases come to fruition. And the market's already telling you that. If you look at those charts, they're pretty bullish.
So XMD is one ETF you mentioned there, and that, of course, is it tracks the stocks in the TSX Composite that aren't in the 60 blue chip index. And let me just check over the past year. That one up, wow, including distributions or dividends, up almost 40%. And just looking at the and there we have the ETF. It's showing, yep, up 35% excluding dividends. Just finally, we've seen these massive inflows into ETFs this year. Bloomberg reckons US ETFs will take in about $1 trillion US dollars for this year, breaking the annual record by 17%.
Yeah, and that's been like you're seeing lots into the traditional passive area, but you're also seeing a lot of ETFs developed on the innovative side. We've seen a lot of the single stock covered writing or single stock levered ETFs that have garnered a huge amount of assets. And those are more, those are shooting with a rifle. Those are probably more trading oriented than investing oriented.
Yes.
But certainly the suite of opportunities for people to take advantage of things and position their portfolios has never been greater. That also brings in the paradox of choice. You should probably think about making sure your portfolio is well balanced, making sure you have the right amount of bonds, making sure you're not too heavy into the AI tech, mega caps, and start to look at completing the portfolio a little bit more. Look, if you're a Canadian investor, Canada provides a wonderful diversification opportunity that is absolutely tilted to what's going to be required to build that AI infrastructure out.
And another trend, just interesting, south of the border, apparently more companies are getting approval to have their mutual funds also traded as ETFs.
Correct. And this came because the Vanguard had a patent, actually, and that patent expired. So they had a specific set of rules that they had exclusivity on in the mutual funds and ETFs that they managed. When that expired, you had basically a great number of mutual funds in the US start to look to transition to an ETF, because the ETF structure allows for the deferral of capital gains in a roundabout kind of way, where mutual funds actually have to pay those distributions every year. So there's a bit of a disadvantage for mutual funds that's going to be closing. And so, yes, you saw that huge rollover opportunity as well.
Thank you very much, Mike. Really appreciate it. Mike Philbrick, CEO of Resolve Asset Management.
Always a pleasure.